All right, so let's begin the show. And when it comes to financial planning or maybe planning your investments, a common advice that we hear from experts is that you need to first have your core portfolio ready, and then maybe you can look at diversification. And when it comes to diversification, you can look at diversifying into different themes or sectors. Now, talking about sectors, healthcare or pharma as a sector has been on radar for a lot of AMCs lately. And so today on the Money Show, we are focusing on Kotak Healthcare Fund. The NFO actually closes on 4th December. Let's discuss more on this. I have with me Shibani Sircar Kurian, Senior Executive Vice President, Fund Manager, Head Equity Research, Kotak Mahindra Asset Management. Shibani, good evening and welcome to the show. And yes, we're going to talk about the healthcare sector and immense potential, when we talk about the Indian healthcare industry. But one point in concern is also the kind of transition that this entire sector is witnessing, Shibani. Now, looking at the transition, how do you decode this? And also, so the timing of the NFO. What's the crucial aspect of this transition that can be of benefit for our viewers and investors, if at all, wanting to have this kind of a fund in their portfolio?
Yeah, absolutely. So you are right. The healthcare sector of today is not the same as what it was, say, maybe 4, 5 years ago. Now, as we know that, our population globally is aging, and as life expectancy is increasing, there is requirement for affordable but high quality healthcare, and therefore the opportunity set that this sector provides is structural in nature. Now, for Indian pharma industry, what started out as companies manufacturing in the domestic space in terms of branded formulations and then exporting to the rest of the world, especially where generic drugs are concerned. Today, the sector has become extremely diverse. So it's no longer just limited to the export opportunity in terms of generics or the domestic play. You have many companies which are now diversifying and moving up the value chain, looking at specialty pharma portfolios and drugs in that space, which are again critical medicine, which is high margin in nature. We have companies which are part of the CDMO space, which is called contract development and manufacturing, which is also a large opportunity set. And finally, companies which are looking at API manufacturing as well. So this is the pharma industry. But when you look at healthcare as a sector, the sector is even more diverse. As over the last 3, 4 years, you've seen significant number of new companies that have come for listing, especially in the hospital segment, diagnostic health insurance. So therefore, we believe that overall, healthcare as a space in terms of the growth opportunity set remains fairly large and intact. Indian companies are very well placed in the global generics exports market and occupies a significant share. And third, and most importantly, companies are moving up the value chain in terms of the kind of product portfolios that they enjoy. And many new listings have happened across in the healthcare space, which makes the opportunity set fairly large.
Shibani, also considering the entire concept of health, which is also changing in the country, and the brighter prospects also of the sector that you just highlighted. Now, keeping all of these things in mind, I really want to understand, the kind of exposure across market caps you might be wanting to have in this particular fund, and in terms of entire healthcare sector, what would be the specific companies that you might be looking at or would be on your radar?
Absolutely. In terms of construct of the portfolio, we will go bottom up in trying to identify companies. We will follow what we call internally as a model, which is known as the BMV model, which is essentially business management and valuation. So in terms of business in the sector, we will try to identify companies with a product portfolio or an approval pipeline, which will help in terms of growth ahead of the industry. And that growth should be scalable and sustainable in nature. We will also focus significantly on the corporate governance practices and management quality in terms of their ability to meet their strategic targets and their vision, and of course, accounting policies. So that's going to be a key area. And third is going to be valuation, where we will look at growth opportunities, but clearly at reasonable valuation. So this is a model that we will employ in terms of identifying companies across these different segments that we discussed earlier. Now, what you're rightly saying is that, if you look at the entire pharma healthcare space, the space itself has evolved significantly. Today, if you look at the segment per se, the domestic business, which is the branded formulations business in India, has been growing at a pretty steady pace of about 10 to 12%. And therefore, that's been a steady area of growth. What has also turned around on the US generics business is that price erosion has now moderated and has become pretty much single digit, low single digit from the mid teens price erosion that we saw some years ago. So competitive intensity has come off, which means profitability has improved. And also, many companies are now looking at specialty pharma portfolios, where again there is a big opportunity set and where profitability is large. So I think the way we will look at this portfolio, there will be no constraint in terms of market capitalization. We will have an approach to be market cap agnostic and look at construct of the portfolio on a more bottom up basis.
All right. Now, these kind of companies or exposure would be there in different kind of category funds also. How would you advise our investors to be placed in this particular sector, if at all, using this kind of a strategy to diversify their portfolio?
So absolutely. But one point I wanted to make here is that if you look at the frontline indices, say look at Nifty 50, Nifty 100, or even the broad index such as NSE 500, the pharma sector weight or healthcare weight in these indices is actually low single digits or mid single digit. And therefore, a diversified fund, assuming even if they were overweight on the sector, would not have a significant exposure from that perspective because the benchmark weights are fairly low. And therefore, what we believe is that given the structural opportunity, if somebody wants to have an exposure to the healthcare space in the overall equity asset allocation bucket, make way for a pure play healthcare fund and therefore play the healthcare sector through that kind of a product, which is what we are launching at this point in time. So, what we are also saying is that if you're looking at from a valuation perspective, of course, the growth opportunity set is well known and is structural in nature. The healthcare space, in terms of valuations, are also trading at multiples which are in line with long term averages, and therefore valuations are reasonable as well. And therefore, somebody who wants to invest for a slightly longer period of time to benefit from the structural opportunity can look at a pure play healthcare fund in his overall equity asset allocation bucket.
All right. I think that will be all. Thank you so much, Shibani, for taking time out and helping our viewers with their strategy in healthcare space. Thank you so much.
Thank you so much.